Rob, today we've had the announcement that Verizon is going to buy AOL for $4.4 billion, something to do with multi-screens, millennials, all kinds of stuff. Why are they buying them?
Well, it's clearly because Consolidated Buggy Whip refused to sell.
So you think this is a good deal then?
Well, joking aside, there is a real business here. But I think the first thing you have to think about when you think about Verizon spending this kind of money is the reputational damage they're taking on. If they want to be all those things, they want to be millennial and multi-screen and all the rest, over-the-top video, they want to be, et cetera, they could hardly have done a worse thing image-wise than to buy a brand which we all associate with how our mothers, grandmothers, and grandfathers get online.
Well, what's the business? I mean, what's in the business?
Yeah, so
AOL.
the real business, that bit we all think of when we think about AOL is actually less than a third of revenues now. That's people who pay, who mistakenly think they have to pay, in addition to paying their service provider, they have to pay another fee to get on the internet and keep their AOL.com email address, which do have a certain irony value at this point, I will admit. The other businesses are basically an advertising business. AOL has acquired a lot of properties over time, most notably the Huffington Post, but a mishmash of other properties. And so it sells advertising across those properties on the internet, and it has a third-party programmatic advertising program. What that means is it helps other companies sell their advertising across the internet.
Like a Google sort of.
Yeah, it's a micro Google kind of business. And these businesses do generate free cash flow. So this is about a $2.5 billion of revenue business annually, and last year it was something like $350 million in free cash flow. So it's not an outrageous price to pay for a company that posts those kind of numbers. Whether it achieves all the hashtag millennial stuff is another question altogether.
Yeah. So what is it they're trying to do with putting the two companies together?
Well, I think what this indicates
what
this indicates is that Verizon is interested in being in content. And that is always a fraught thing to do. There's internal conflicts in terms of how a distributor treats the content that belongs to other people besides itself. Is it giving everyone a fair deal? And also they're just simply very different kinds of businesses. And because you can manage one well, and Verizon does manage its distribution business well, doesn't mean you can manage another well. The saving grace of the whole thing is this is a $200 billion company in Verizon buying a $4 billion company in AOL. So at the end of the day, it's a lot of money, but for Verizon, it's not that big a deal. So they've made something that might make sense from a business angle and might not. Certainly doesn't make sense from an image point of view, but is not that much money by their standards.
All right, so we'll have to wait and see how it goes then, I guess. Thank you.